In today's video, we have Mr. Great Reset himself, one of the foremost experts in the world on the reset of the global financial system. And he is also the man behind Commodity Discovery Fund, which we will link right there down below. That's Willem Middelkoop. We will link his Twitter and all that good stuff right there down below as well. And we'll give a shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. That's Vizsla Silver. So give us a comment right there down below that says the reset is here, because we got a lot to talk about. Today's guest is really probably one of the first people that really started breaking down what the future was going to look like. And all of a sudden it's here in great force. So make sure you hit the like button on this video, share this video, send it out in the YouTube universe. And it's good to see you, my friend.
Good to be back. When was the last time?
It was right when you did your Tony event.
Oh, yeah. Seems like ages.
Yeah.
The world is different now.
Yeah, it is a lot different now. I got to think it's pretty interesting to you, someone who's devoted so much of your life to researching, and now you're seeing so many events unfold, right?
Been writing and warning about this for 20 years, and it seems to be unfolding now, and be careful what you wish for. We're making lots of money in our fund, but it's not a pretty sight, to see what's happening. We're here in Europe, and I can walk to Moscow. Will take me a few days, but it's not that far away.
So what do you make of all this? I mean, you said obviously time where you can make a lot of money, but as a father, she'll be 2 in August. And then my wife's pregnant with the second one. And, I'm just trying to make sense of it. So how do you make sense of what's happening right now? And how does it fit into your research?
I'm lucky. I'm a boomer, My 2 sons are adults now, so I feel very flexible, and that's why I also feel relaxed. I have a second base in Switzerland. I'm looking at Dubai for a third base because that's outside of the EU. And well, I think we're all quite shocked about Mr. Putin's actions, and I have friends, who've been reporters who lived in Russia for years, and they didn't see it coming. We expected a small military action because of the republics in the east, or the part of Ukraine in the east, which wants to be united with Russia. But we never, also people in Kiev, there was hardly anybody in Kiev who thought that they would have to fight for survival in that capital. That's a Western-like city of 3 million people. And so everybody, first we were shell-shocked for the first week. And now the first dust is settling down. And Putin is showing some early signs of, looking for a way to the exit, one could say, because not only Ukraine is being destroyed, Russia is being destroyed as well. Not because of bombs exploding, but when you're disconnected from SWIFT. And today, even Royal Dutch Shell and all these major companies, they're just moving out of Russia. And, Royal Dutch Shell, they worked so hard on this Sakhalin project in the far east of Russia. And now they just leave. So I just read a piece of research by an expert in this field, and he expects Russia to collapse, like the Soviet Union collapsed in 1989. So this could become the end of the Putin era because of a collapse of Russia. But then you have another problem, because there's no opposition. There's nobody left. So, and it's all uncertain. And I'm not predicting that Russia will collapse or that Putin will collapse, but I can predict that the economy of Russia will collapse. And I think if history is any guide, you will see hyperinflation in Russia. But the moves we've seen in commodities, they stopped trading nickel today. We've seen moves of 50% in a day. Well, hyperinflation, if you have moves of 50% a month, we see them in a day. So many moving parts, and so difficult to understand what this will mean for the future.
Yeah, I can't help but feel really bad. I mean, for just the ordinary citizens in Ukraine and Russia. I mean, you're talking about millions of just ordinary people who, their life's gone. And obviously these ramifications are going to, be everywhere. You're in Europe and there's the energy crisis that's brewing in America. I was just in California last night and gas is over $6 where I was in California. And so what are some of the ramifications that we're going to see from this, and how does it fit into your years of research on this reset?
Well, I always said that one day we would pay the price for decades of currency debasement. And we were asleep at the wheel and we trusted our central bankers that inflation was pretty steady at 2%. And the deflationary forces and that's Siri. And deflationary forces were stronger. And we also warned for years that one day we would learn that there's a shortage on commodities. There would be a shortage on energy. I actually wrote 2 books on energy. The first one was in Dutch, but the translation is The Permanent Oil Crisis. It was published in 2008. And we warned in that book that we're not out of oil, but we would run out of cheap oil very soon. That's all happening now. If you look at the natural gas prices, we use gas for heating, and the price is up 10x in a year. So the ordinary Dutch people here see energy bills which are double, triple, and we don't know what to expect. And the 1% and 2% can easily adjust, but if you're just middle class or lower class, and then look at food, what happens with food prices, and this, the consequences will be enormous around the world. But if we go back to the reset thesis, I wrote The Big Reset in 2013. And on the back cover of The Big Reset, I wrote that the system reset seems imminent around 2020. We need to have huge changes within the system. We need to find a successor for the dollar. We need debt restructurings. Well, that's all coming to fruition now. And there's so many moving parts, and it's so difficult to understand. And it's so difficult to see how things can stay stable. Look at the prices of commodities. Look at the daily jumps. Look at the shortages developing now. We are discovery investors. We are commodity investors. We know a lot about Russia and commodities. 10% of nickel comes from Russia. 17% of the high-grade nickel comes from Russia. 40% of palladium comes from Russia. Look at the energy, so much changing now, and I think the ramifications will be felt worldwide for years to come. And I think in Europe here, if Putin isn't going back, isn't returning his military within a few weeks, the changes will be felt for decades to come.
Yeah, and then you've got 40%, I believe, of global enriched energy, or excuse me, global enriched uranium comes from Russia, obviously.
Kazakhstan. That's Kazakhstan.
Kazakhstan.
Yeah.
And so my concern is when you've got commodities moving like that, and Russia's such an important component in so many of these commodities and so many of these energies and gases and oils and uranium, the social ramifications. You talked about stability. That's concerning, right? Globally.
Yeah, and we already, after the start of COVID, of course, we had a huge crisis already, and this crisis was tackled by printing just huge amounts of money. The triple amount of QE we saw in the first 12 months after COVID started compared to after Lehman crashed in 2009. So we saw the doubling of the balance sheet of the Federal Reserve, the same here in Europe. And this actually ignited the inflation trend. So the inflation trend already started well before this Ukraine war. But now, with all the effects from this war, so many people are starting to flee to all the government can't print. Commodities being one of the first place to look. And there was so much underinvestment in the commodity space, and there was so much undervaluation, and everybody was in tech. And now we see this great rotation where we see the correction in tech and the broader stock markets. And we see huge moves. We hear this from our high net worth investors. We hear this from the company who is responsible for our back office, so who's doing all the administration for our investors. So many investors are moving money now, looking for a place to hide. And that's very dangerous. And you see that on the markets. We've seen stock markets close in Russia. We've seen trading stopped in nickel in London. This doesn't supposed to happen. You only see this when you have wars. And, well, that's where we're in now.
Yeah, I want to talk about where you think it goes. But first, let's talk a little bit about currency inflation. And then let's talk a little bit about how this all affects the US dollar. I mean, a couple things I'm wondering. Eventually, when the dust settles, does Russia try to start trading energy in gold? And then does this embolden other countries that are part of the petrodollar system to then, seeing how weak the Biden is, to stiff arm and say, we don't want to trade in dollars either. So how does all of this happening?
Yeah, that's the big question. And what will China do, actually? That's the most important question. But also, what will the Saudis do? And China, India, the Middle East, they don't have sanctions. So that's half of the people in this world, just these parts of the world. And I saw a map of all countries imposing sanctions now. Actually, those are just the countries in the West. So it's Canada, the US, Europe, Australia. But we all know the West is in decline. So the dollar empire was in decline already. And that's what the big reset is all about, that we need to move on to the next phase of world's monetary system. And I ended the book by stating that you can have a rather smooth monetary reset when all the major trading blocs worldwide use their combined efforts to move to this new phase. So you need cooperation. But I predicted in the book, when you don't have an agreement between the East and the West, between the US and China, you could have a war. Well, here's the war already. And China is not actively supporting Russia in a militarily way, but they are supporting Russia in a financial way. And we all know China is looking at Taiwan. So when will they move? So the big reset, like I envisioned and predicted for around 2020, we could move to another world reserve currency. That's all becoming very difficult now.
Yeah, and it's a weird situation too, because of course you have, a lot of these military industrial contractors that, they like the situation that's going on. So sure. It's this bizarre situation where, to me, I'm just trying to put pieces together of what it looks like on the other side. What do you think it looks like on the other side? Because it looks obvious we're headed to some form of a global currency crisis if we're not already at the precipice of it. I mean, before any of this happened, I saw Germany's producer price index was, what is it, up 29%?
30%. Yeah, 30%
year over year, highest since 1949. I mean, inflation's way higher than 7.5% here in America.
Yeah. I always said, and that's what the big reset is all about, that once you reach a point that all prices are starting to move up, and we saw it first with asset inflation, and we all thought that was great. Price of real estate went up, the stock market went up, but the CPI inflation was rather low. So we all felt wonderful. But now we have inflation also with food and energy. And actually, with the German number you just called up, if you take out energy, it's still plus 12%. So now you have rampant inflation worldwide. And actually, when you see all these prices moving up, you should say that the value of money is going down. That's the real story. And when the valuation of money is going down worldwide, you could say money is losing, people lose trust in money. And there's this great book on the Weimar hyperinflation of Germany in the 1920s. And it's called When Money Dies. And actually, this is the dying of money. So these moves. And we know from history, once you get this spiral of prices going up and you get the wage demands, look at that, what McDonald's has to pay hamburger flippers now, that used to be $7, $8. It's $17 or $18 now. So it's very hard to stop such a spiral. And now you get this huge crisis on energy and energy prices. So that's another spike. So I think my prediction always was that we need to bring gold back into the system. We need to restore the connection between fiat money and something tangible like gold, to restore the trust in the monetary system, and that will be needed. But I was hoping that we would have cooperation between the East and the West, and we could do this through the IMF and have an organized monetary reset. But now we might up with China and Russia introducing their own gold-backed currency. I don't know if that will happen, but we will all lose if we don't work together worldwide to solve these major problems.
So where does gold and silver fit into all of this? In this reset, tell me if I'm right or wrong. I kind of feel like there's, I guess you could say, two camps, in that there's kind of an honest money reset that a lot of people want. And then there's a very technocratic reset that is, a centralized digital currency where all of from your biometric data, everything's stored in this. It can be shut off. So there's like this technocratic reset, and then there's like an honest money reset. I wonder if you could talk a little bit about that and where you think gold fits into it as well.
Yeah, I agree. And I think we have to talk about Bitcoin in this respect, because before the start of Bitcoin, so before 2008, there was only fiat money, and you had gold as some kind of hard money. The old form of money, which has been around for 5,000 years, but nobody was using it. And because of Bitcoin, people of a younger generation, your generation, they started to understand that you could have different forms of money, and you could have even have private money. Bitcoin is a private form of money, and there's nothing wrong with having private forms of money. Money doesn't have to be something the government organizes or coordinates. And because of Bitcoin and its success, there was a huge pressure building within the fiat system, how to react on that. And then the central bankers, of course, who are responsible for all this mess and the debasement of currencies for decades and decades, they thought that by introducing their own central bank digital currency, they could compete with Bitcoin. And they still hope to do that. And they are in a hurry to roll out and to test their central bank digital currencies. Actually, China is ahead in that race. The euro will soon start. I think they're testing, and the dollar is a few years behind. And they hope to combine these central bank digital currencies in a basket one day, and then use that basket as the successor for the dollar. But with all the currency debasement and all the inflation now running around, people won't trust the central bank digital currencies any more than the current fiat currency. So more and more people will start to flee to all the government can't print, and especially to all the money the government can't print, being gold, silver, and Bitcoin. Because Bitcoin is like a digital form. It's like digital gold. Actually, I called it digital gold in 2014 in the Dutch translation of the Big Reset. So, and the boomer generation, people of my age who have a lot of money, I talk to these high net worth individuals every day, every week. They all understand Bitcoin now. So they're all starting to add some Bitcoin to their holdings. But they also want to own gold and silver. And these gold and silver and Bitcoin markets, they're so small compared to the 300 trillion of all assets worldwide. There's 100 trillion in bonds, there's 100 trillion in real estate, and there's 100 trillion in stocks, if we simplify. And now some of this money, of this 300 trillion, is starting to move to very small markets. The total physical silver market is less than 30 billion a year. 30 billion. That's what the central banks produce almost every day. And we all know the prices of gold and silver have been held in check and have been managed by selling paper gold, paper silver. But that's starting to fail now. And now we had the stop of trading in nickel today. People are starting to wonder what could be next. And I'm looking at my screen now. Silver is up 4.5%. Gold is up 3%. I've been watching the gold market, gold trading for over 20 years. Gold is always kept at 1 or 2% advance intraday. Now it's up 3%. So these are moves. Platinum is up 5%. Palladium is up 5%. While the base metals are down for the day. So this, you see the money fleeing now, and that's scary. It's good. It's good for us as investors because we've been positioning ourselves for the last 10 to 15 years for this to develop. But be careful what you wish for. It's not. It shouldn't be this way.
Yeah, it's exciting as an investor, but it's certainly not exciting as a citizen. It's been on Bitcoin. It's been interesting to watch, especially as governments have started to essentially begin freezing people's accounts, Canada and all these types of things like that. Of course, also in Russia, you've had ordinary citizens that have been shut off from the system. So, yeah. I imagine we're going to see more of that and a further move there. Where do you think the price of these things go? Or is that a dumb question because you're seeing currency become so, I hate to even say the word meaningless, but it's becoming that way.
When there's an unlimited amount of money which being printed, you have an unlimited downside in the value of money, which means you have an unlimited upside in the smaller markets of the real money. We talked about gold, silver, Bitcoin. So there's an unlimited upside because there's an unlimited downside to the value of money. You had this French philosopher, Voltaire. He already said in the 18th century that fiat money always returned to its intrinsic value, and that's zero. I have an appendix in the Big Reset. People can download it for free. Google downloads Big Reset and the Commodity Discovery Fund, and you find it on our website. There's an appendix in the book, and that's a list of over 250 currencies which have disappeared over the last 300 years, half of them through hyperinflation. There's not one example of a fiat money system which survived for over 100 years. So it's guaranteed. It's a guarantee. I can give you a guarantee that a fiat money system will go back towards zero, the value of money. So you have to do a monetary reset. You have to bring gold back into the system to restore faith and trust. And central bankers know this, and that's why they still have so much gold. So I expect central bankers will take the initiative to revalue gold and to bring gold back into the system once the pressure gets big enough. And that could happen somewhere in the next few years. And that's why I wrote in 2014, around 2020, you can expect a gold revaluation because that's a dollar devaluation. And the only problem with the current war is that, as I said, you need cooperation between the East and the West. Even in 1944 at Bretton Woods, when the US knew they would be the winner after the Second World War, they invited the central bankers from 44 countries to come to Bretton Woods in New Hampshire. And there was even a delegation from China and Russia. And then China and Russia, they choose to opt out of that system and build their own system. But now you need to have them on the table to discuss this. So first we need to see how the Ukraine crisis will be solved. First, we'll have to see whether Russia will collapse totally or whatever. And then we need to sit around the table and to organize a new Bretton Woods. And the IMF knows this as well, because the IMF go to their website or Google IMF and Bretton Woods. They build a part of the website. And they published it in October 2020, and it's called a new Bretton Woods moment. They officially have it on their website. They're not telling you what they want to discuss at the new Bretton Woods moment, but they call it a new Bretton Woods moment. And look at what Klaus Schwab, the president of the World Economic Forum, has said in his interviews and speeches. And he said, we need to build new institutions because the old institutions from the end of the Second World War, which we built at the end of the Second World War, we can't use them any longer. So he understands as well.
What does a revaluation of gold look like? Is it an event where the central bankers come out and they say, hey, here's the new price of it? Or what does that exactly mean, a revaluation of gold?
You can have two types of resets, of revaluations. One by market forces. That's what we've seen actually in the 1970s, where where gold was valued at $35 per ounce since 1944, because that was agreed at Bretton Woods. And then when Nixon closed the gold window, we saw a gradual revaluation of gold from $35 to over $800. But you can also have a gold revaluation which is organized by central bankers. And this was done actually in the 1930s in the US. In the US, during the crisis, the Depression, there was a law that all Americans, they had to hand in their gold, their physical gold, in return for $20 an ounce. And then when all Americans handed in their gold, they built Fort Knox, and then they revalued gold to, what was it, $35 per ounce? So that was a dollar devaluation, it was a gold revaluation. And that was of great benefit to the US administration. So it has been done in the past, and central bankers can have a meeting on a Sunday and just publish a press release Sunday evening that from tomorrow on, all central banks will buy physical gold for $8,000. And then that's the new price. And don't forget that all central banks worldwide own physical gold. And the US has 8,000 tons on the balance sheet, still on the balance sheet at a historical cost price of $40. So if there's a gold revaluation to $8,000 an ounce, it will be highly beneficial for the balance sheet of the Federal Reserve. But Russia has gold, China has gold, the EU has gold. So we all benefit of, or I should say, all central bankers benefit.
Very interesting. So as we wrap up here, you're someone that, of course, we talked about the macro, and you've spent all this time doing this great research, but you've also been someone who's been able to capitalize on opportunity in this. Let's talk a little bit about, in conclusion, important ways you can prepare yourself, whether it's investing financially, mentally. Of course, you have Commodity Discovery Fund, and you're heavily invested in commodities. Let's wrap up there.
Yeah. I started to study this when I was quite young, and I was buying real estate in the 1990s in the Netherlands, the buy-to-let market, which wasn't popular at that time. Now everybody's playing that. But I was taking out mortgages, not telling the banks that it was my second, third, or fourth mortgage. And I just bought all these apartments and rent them out to expats. And then I thought that's a nice way to make money. I had so much leverage to the upside. But then I understood I have this leverage on the downside as well. So I better study economic cycles and monetary cycles. And that's how it all started for me. And to come back to your question, I think I have a very simple model which works for most people who own between, let's say, $100,000 and let's say a few million. If you keep 25% of your net worth in real estate, mostly your home, you keep 25% in physical gold and silver as the insurance. You have 25% of your net worth is stocks, could be tech, could be commodities like a fund, like our fund, and you have 25% in cash or Bitcoin. And I advise people to buy more Bitcoin, to hold more Bitcoin than cash. And then you have 75%. If you follow this, you have 70% of your net worth outside the financial system, because your physical gold holdings are outside the financial system. Your real estate is outside the financial system. And the Bitcoin you own, if you put them on a cold storage, is outside the financial system as well. So then you have only 25% being your stocks and some cash into the system. So when you have a huge crisis like you experience now, whether it's Canada where they close your account, or whether it's Russia that there are sanctions and your credit card is not working anymore, you always have a large part of your net worth safe and sound. And I meet too many people who have all their money in the system, and they don't understand if you have money in the bank. Well, technically, legally, it's not even yours. You have a claim on the bank. And all the other money is on the stock exchange. If the stock exchange would close in the US, where's where do where do the Americans have their net worth? It's all in 401 case. And that's why I always advise them, first start by building some physical, silver being more interesting than gold, because silver is so undervalued. It's the only metal actually which is trading at 50% of the 1980 high. So that's 40 years ago. Silver was 2x from the current price. So silver, and I think the silver window will close down, because so many people will now start to be interested to add to their physical holdings. And this is such a small market, so it could easily close. And but gold, silver, and Bitcoin, if you're rich, if you're poor, all people can buy a little of that, gold, silver, Bitcoin, and you might do a little better than your neighbor.
Willem, I really appreciate your time, and I appreciate all the research you've done for the last many years. And obviously it's coming in a lot of handy for a lot of us to help make sense of everything that's happening.
Well, thanks for this. It was a nice chat.
Yeah, so for everyone listening, we're gonna link Willem's website. We'll link his Twitter. Give us a comment right there down below. For the good old fashioned YouTube algorithm, you could say the reset is here right there down below. We'll link all the websites and all that good stuff, where you can also get his copy of his book as well, The Big Reset. Make sure you hit the like button on this video, subscribe, bell notification, and make sure you get notified for future episodes. We want to thank you for listening. We want to thank you again for your time today. I really appreciated the conversation, Willem.
Thank you.